Welcome back. Ashwini Kumar Hooda joining us now at DMD at Indiabulls Housing Finance. Ashwini, good morning. Let's start off with the QIP. You decided to raise 683 crores in line with what we're seeing in the industry. Talk us through some of those that participated, the kind of response that you've had, any marquee names you can share with us as well.
So we've raised more than 1,200 crore rupees through QIP and part stake sale in Oak North Bank. The QIP was 683 crore. A lot of existing shareholder and new shareholder participated. So large one were Nomura, HSBC, Millennium, Tosca Fund. Existing shareholders were Treetop, JP Morgan, Societe Generale, Morgan Stanley. So, whole host of marquee global large international investors participated in the QIP. And for AA rated NBFC, this is perhaps, one of the very few QIP that has appetite in the market. So it has been a very successful issuance.
Okay. Now, post this as well, talk to us about the kind of equity dilution we're looking at, change in book value, what the promoter shareholding will look like.
So, dilution will be, we did not want to dilute at a time when non-banks are not trading at high valuation. So, the dilution will be around 8 odd percent. Promoters continue to hold, pre-issue, they hold the 23.5%, so it will get diluted by 8%. So it will still be 22% kind of shareholding that founders will continue to hold. So it is more a confidence capital as we get into the growth mode. This helps us stabilize our ratings. As I said, AA rated non-banks haven't been able to raise equity. So this is a demonstration of adding to already very high capital. So our regulatory capital will go past 30% with this capital raise. And in the recent past, because of our increased access to debt markets, we've already raised more than 12,000 crore from the financial system, and we'll raise another 3,000 before September end. So 15,000 crore of debt raised in first 6 months of financial year gives a lot of liquidity and growth capital. And this equity capital tops that up and helps us on a growth path.
The business is slowing down, economy is slowing down, demand is slowing down. If you're raising capital when demand itself is slow and when you're sitting on surplus capital, won't that dent all your return ratios?
So you have seen that a lot of market participants, a lot of non-banks were there in housing finance space and loan against property space, which have gone out of the market. So there is actually a lot of demand for home loans, which is not being fully met right now. Indiabulls is a technology leader, and then for last 4 years, and we've done thousands of these loans on technology platforms. So we believe our distribution forte is there, and we are also on the asset side now, working together with banks rather than competing with them through co-origination and securitization. So our ability to give very fine rates to the customer by partnering with banks is there. And we have a proven track record of distribution and very quality asset origination. So we believe that there is a big market. We are only 4% market share, so we can, grow very well. Secondly, the housing market, while perception may be that real estate is not doing well, and then it is true to some extent, but the demand for complete or near complete projects has gone up substantially in last few months, as more and more people who are waiting on sidelines are coming to buy. One, the prices have come down. More importantly, the interest rates have come down almost 30%. So EMI comes down very close to the rent. And then there are soaps like Maharashtra has announced 3% cut in stamp duty to only 2%. So all this combined with the fact that everyone is staying in their house. So if it's a large family who was putting up in a house, it becomes more uncomfortable now, and this is the right time to move. So we've seen huge clearing of inventory by ready inventory in the marketplace. So all this bodes very well for the demand, and we believe structurally also in India, housing demand sustains. So we are very hopeful that this additional capital will help us do the growth that we are looking at.
Okay, now before we wrap, let's talk 3-year out, and something which I just want to address for our viewers and your shareholders and future shareholders. People are asking basic questions that what will be the promoter holding and what will be the promoter skin in the game 3 years from now, because the promoter holding has come down, dilution is happening. So 3 years from now, is there a threshold at which beyond which the promoter holding is not going to come down? I mean, that is what everybody is asking, because there are a lot of changes which have happened suddenly in the housing finance business in terms of ownership.
So while the founder has taken a CEO position in one of his other company, Indiabulls Venture, and as a result has become a non-executive, he's become a step down as chairman, executive chairman of Indiabulls Housing. There is no change in the shareholding that is anticipated. He is fully committed to the business. In fact, he has increased his shareholding, which was around 21% to 23.5% in the recent past. So I believe that he continues to be fully invested as far as his economic interests are concerned, and then there is no plan to dilute that. What we have done is we've moved away from real estate business, where he has sold his stake, so that Indiabulls Real Estate is out of the fold of the group, and that was the stated strategy, as our businesses are in financial services and real estate do not gel very well. Regulators do not see that positively. Apart from that, he's fully committed to his financial services business.
Okay. So post the stake sale to Oak North Bank, Ashwini, what would be your shareholding in the bank?
So we've, done 2 transactions and raised 552 crore. We would raise another 950 crore, after which our stake should come down to around 8%. So we will continue to hold shares in Oak North Bank even after this dilution. So the move is we've raised 1,200 crore, another 950 crore. So we will raise more than 2,000 crore of fresh capital to increase and boost our capital adequacy and give a lot of comfort to our rating agency for an upgrade in the near future. And subsequently, we will continue to hold around 8% in Oak North Bank.
Okay. I wanted to get back and get in some more clarity on the QIP. What is going to be your capital adequacy ratio post the QIP, and will this capital then be enough for growth in the near term, or do you have further capital raising plans?
So this capital raise was more of confidence capital. The fact that there are large shareholders, global institutions who are willing to put fresh capital into the company. There was no requirement, as we already had a very high capital adequacy of 27% plus. This will cross, regulatory capital adequacy will cross 30% now. So we are very well capitalized, for next 3 years growth, and there is no further dilution that we are expecting.
Okay. Ashwini, good to have you on the show. Thanks so much for answering our questions. Good to speak with you.